welcome. Great to have you here. Okay, I can see some people joining. Keep coming in. While we wait for a few people, I want you to drop your business type in the charts. In the comment section, drop your business type. Are you in tech, e-commerce, healthcare, real estate? Let me see who is in the room today. Let me see who is in the room today. Oh wow, we've got people in e-commerce. Oh good, that's good. Love to see it. This session is specifically for you. All right, let me ask you a straight question, and I need you to be honest with yourself, not with me. If Federal Land Revenue Service, now Nigerian Revenue Service, walks into your business today, right now, this minute, and asks to see your financial records for the past 2 years, will you have something credible to show them? I want you to answer that in your mind. Even you can just put it in the comment section. Not receipts stored in a drawer, not bank alerts saved on your phone, not I'll call my accountant. Actual, organized, verifiable records. If you hesitated even slightly, this live stream might be the most important thing you need to watch, especially this month. Here is the reality. Under Nigerian new tax laws taking full effect this year, record keeping is no longer optional, no longer something I'll sort out later, no longer just for big companies. It is now a legal requirement with serious consequences for businesses that fail to comply. And whether you are whether you are running a tech startup, selling products online, managing a private clinic, operating a school, running an agribusiness, developing property, or offering professional services, the rules now apply to you. Well, as usual, my name is Cheta Okupola, and today I'm going to break down exactly what records you need to keep, how to keep them, and why this is actually good news for your business if you get it right. Smash that like button, share this stream to your WhatsApp groups, and let's get into it. Number one, the law now demands it explicitly. The new tax administration provisions are crystal clear. Businesses must maintain accurate books and records of all transactions. Not should, not it is advisable. Must is a legal obligation. Number two, the tax authorities now have the technology to catch you. NRS is no longer operating with pen and paper. They have digital systems. They can cross-reference your bank transaction with your filed returns. They can access third-party data if there is a mismatch between what you are reporting and what the data shows, you will be flagged. Number 3, and this is the one people don't talk about enough. Your records are no longer just for tax purposes. They are for your benefits. They are for your benefits. Think about it. You want a bank loan, they'll ask for financial statements. You want investors, they want to see your books. You want to win a big contract, procurement will request your audited accounts. You want to sell your business someday, buyers will conduct due diligence. Poor records don't just create tax problems, they lock you out of opportunities. They keep your business small. So let's flip the narrative. Record keeping isn't a burden the government is placing on you. It is a foundation you are building for yourself. Just drop an emoji in the chat if that is making sense so far. Drop an emoji in the comment section if it's making sense so far. So what are the records you must keep? Okay, let's get practical. What records exactly does the law require you to keep? Exactly does the law require you to keep it? So I'm going to give you the essential categories. First, income records. Every single naira that comes into your business needs to be documented. Sales invoices, receipts, contracts, payment confirmations. If money entered your business, there must be a record of it. For my e-commerce people, this means records of every order, online and offline. For my clinic owners, every patient's payment, every deposit, installment, and final payment. Document it all. Document it all. Second, expense records. Expense records. Every naira going out of your business in form of supplier invoices, receipts for purchases, utility bills, rent payments, salary records, contractor payments. If you spend money on your business, keep the proof. Why? Because expenses reduce your taxable income, but you can only claim deductions for expenses you can prove. No receipts, no deductions. Simple as that. Third, bank statements and financial records. This is non-negotiable. Your bank statements are the backbone of your financial records. They verify what came in and what went out. Keep statements for all business accounts. And please, if you haven't already, separate your personal accounts from your business accounts. I cannot stress this enough. Mixing personal and business finances is one of the fastest ways to create compliance chaos. And fourth, asset records. If your business owns anything of value, equipment, vehicles, property, computers, machinery, you need to maintain records showing when it was purchased, how much it costs, and its current status. This affects your depreciation claims and your balance sheet. My agri-tech people with tractors and processing equipment, my healthcare providers with diagnostic machines, my tech startups with servers and computers. Document these assets properly. Fifth, tax records. Every tax filing you have made, every payment receipt, every withholding tax certificate, every VAT receipt, every VAT receipt, keep them. Excuse me. Excuse me, please. These prove your compliance history. If there is ever a dispute or an audit, these documents are your defense. Sorry, excuse me, please. Sixth, employee and payroll records. If you have staff, you need records of salaries paid, payee deductions, pension contributions, and any other employee-related payments. This is not just good practice, it's a legal requirement under both tax and labor laws. Now, here is the critical part. How long must you keep these records? Under the new laws, you are generally required to keep these records for a minimum of 6 years. Some categories may require even longer. So, those 2020 records you are thinking of throwing away, keep them. Write 6 years in the chat or comment section so it sticks in your memory. Now, let me speak directly to some of the specific industries represented here, because record keeping looks slightly different depending on your business type. Tech startups and digital businesses, you are often dealing with subscription, revenue, SaaS payments, foreign currency transactions, and digital service delivery. Your records need to capture revenue timing accurately. When did the subscription start? When was payment received? If you are receiving payments in dollars or other currencies, what exchange rates did you use? These details matter for accurate tax reporting. E-commerce businesses, whether B2B or B2C, your transaction volumes can be huge. Hundreds maybe thousands of orders monthly. You need a system that automatically logs every sale, every refund, every delivery fee. Manually tracking this is a nightmare waiting to happen. Invest in software that integrates with your payment platforms and generates reports automatically. Private health clinics and diagnostic centers, including laboratory centers too. You are dealing with patient payments, HMO reimbursements, equipment purchases, and consumables. You also have specific regulatory requirements beyond just tax. Keep records that satisfy both your tax obligations and your healthcare regulatory compliance. Educational institutions, schools, health tech platforms, training institutes. Your revenue cycles are often tied to terms or semesters. You may have tuition payments, material fees, examination fees, all structured differently. Break down your income by category and ensure you are capturing everything, including those miscellaneous fees that sometimes slip through the cracks. Excuse me, please. Agri-tech and commercial agribusinesses. Your business often have seasonal revenue patterns, significant inventory movements, and possibly export transactions. Your records need to track inventory carefully. What was planted, harvested, sold, or stored. If you are exporting, your documentation requirements are even more stringent. For real estate developers and property management firms, this is a high value, high scrutiny sector. Every property transaction, every deposit, every installment, every rental payment needs airtight documentation. Land documents, construction costs, sales agreements, rental contracts. Keep everything and keep it organized. Professional service firms, law firms, engineering consultancies, marketing agencies. You are often billing for time and expertise. Your records should clearly show what services were provided, what was built, and what was collected. Retainers, milestone payments, final settlements, all documented. No matter your industry, the principle is the same. If money moved, there must be a record. At this point, some of you might be thinking, this sounds like a lot. How do I actually manage all this? Great question. Let me give you a practical framework. Level 1, if you are just starting or you are a very small operation, at minimum, use a spreadsheet. A well-organized Excel or Google sheet where you log income and expenses weekly. It's basic, but it's better than nothing. Pair this with a dedicated folder, physical or digital, where you store all receipts, and invoices. Level 2, as you grow, invest in basic accounting software. There are affordable options available in Nigeria. Some popular ones include QuickBooks, SoulBooks, and locally developed solutions that understand Nigerian tax requirements. These tools automate much of the tracking and can generate reports with a minimum clicks. It's just a few clicks anyway. Level 3, once you are at the SME level with significant transactions, you need a professional, a bookkeeper who updates your records regularly, weekly or at least monthly, and an accountant who reviews everything, prepares your financial statements, and handle your tax filings. Here is my recommendation. Don't wait until you are big enough to get organized. The businesses that struggle most with compliance are the ones that grew fast but never built proper systems. They are now trying to reconstruct years of records, and it's expensive and painful. Start organized, stay organized is cleaner than catching up later. A quick poll. Drop in the comment section what level, or in the chat if you are watching on YouTube, what level you are currently at. Are you at level 1 with spreadsheets, level 2 with software, or level 3 with professional support? Interesting mix. Wherever you are, there is a next step you can take. More on that in a moment. Let me be very direct about what happens if you don't have this seriously. First, financial penalties. The new tax laws have provisions for penalties on businesses that fail to maintain proper records. We are talking fines that can range from hundreds of thousands to millions of naira, depending on the severity and duration of non-compliance. Second, estimated assessment. Here is something that scares a lot of business owners. If you can't produce records, Nigerian Revenue Service can estimate what you owe. And trust me, their estimates are rarely in your favor. They will assume the worst and bill you accordingly. And you will have a very hard time disputing it without records to back you up. Third, loss of deductions. Remember I mentioned that expenses reduce your taxable income. Without proper documentation, you lose the right to claim those deductions. You end up paying tax on revenue as if you had no expenses. That's a massive unnecessary loss. Fourth, reputational and operational damage. If your accounts are frozen, if your business is publicly flagged for non-compliance, if you're unable to bid for contracts because you can't produce financial statements, that's a damage. that goes beyond money. It affects your brand, your relationships, and your growth. The cost of poor record keeping is always higher than the cost of doing it properly. Alright, let's land this plane. What should you do starting today? Action step 1. Audit your current records. This week, take an honest look at what you have, as what you have. What's documented, what's missing, what's disorganized. You can't fix what you haven't assessed. You can't fix what you have not assessed. Action step 2. Separate your finances. If your business and personal money are still mixed, open a dedicated business account this week. Route all business income through it. Pay all business expenses from it. Clean separation. Action step 3. Implement a system based on your size. Choose your level. Spreadsheet software or professional support. Pick one and commit to using it consistently. Consistency beats perfection. Action step 4. Back up your records digitally. Don't rely on paper alone. Scan receipts, store them in cloud folders. You need a backup. Action step 5. Get professional help. Even if it's just a consultation, sit with an accountant or tax professional. Let them review your situation and advise you specifically. The investment is worth it. Here is the bottom line. Record keeping isn't glamorous. It's not the exciting part of running a business, but it's the foundation that everything else stands on. Your tax compliance, your financial clarity, your access to funding, your ability to scale, it all starts with proper records. The new tax laws are simply making official what should have been practiced all along. And the business that adapts will not just survive, they will thrive. They will thrive. They be the ones winning contracts, accessing loans, attracting investors, and building enterprises that last. If you found value in this session, do me a favor, share it. There's a business owner in your network who needs to hear this. Screenshot this post. Screenshot this. Post it to your story. Send it to your WhatsApp groups. Let's spread the knowledge. Subscribe to our YouTube channel. Turn on the notifications because there is more content coming to help you navigate these changes. Drop any question in the comments. I'll do my best to answer, and the most common questions will become future content. Thank you for spending the time with me. Go organize those records. Stay compliant. Stay profitable. And I see you in the next one. God bless.